Hey, what's going on, guys? Just want to do a quick update, go over some thoughts on BTC, some thoughts on alts. So as a reminder, none of what I say is financial advice. This is for entertainment purposes only. Be sure to check out the links below in the description. There's some new deals with Femex, and Synquote still has a trading competition taking place. So make sure you check that stuff out anytime that you could possibly earn a little bit of extra money while you're already trading. That is nice. So let's get right into it. Looking at BTC, there's a lot of things that I've been saying over the last couple of days, talking about top signals for Bitcoin. Again, to reiterate this numerous times, I'm not talking about a multi-year top. I'm not talking about some secular trend top. I'm talking about the kind of top that we had in March and April of last year, and that persisted for months. And I said during that time, I think the market's going to be topping out around now, look to come back after Labor Day. And sure enough, there were plenty of great opportunities in the summer, but for BTC, the broader market, overall market, the trend did not resume until after the summer. So there's a lot of things that I think we ran up on or on behalf of for this move: the election trade, the Trump trade, and a lot of confidence around what Trump would mean for this market. I think a lot of those are why we have had such a strong move up. If you remember, back in November, we were trading back around the high 60s, 70K, and this has been almost a double. And it's a really strong move for an asset of this size. And again, Bitcoin is one, it's on the main stage. There's a ton of new conversation and new attention around it, and that's great. All those things are very meaningful for the longer run, whereas positioning and momentum and I'd say animal spirits are more important in the shorter run. So shorter, I mean, is anywhere from seconds, minutes, weeks, months. Longer term is 6 months plus, right? 6 months, a year plus. There is a very big difference between how TradFi considers long-term and how BTC or people that are crypto native, what they consider long-term. And you have to remember that a lot of the success of this move is from the ETFs, and it's possible that those types of participants have a completely different time horizon or sense of urgency around what has to take place for BTC based on their decision to get involved. It's more likely that people in crypto Twitter are much more oriented towards the shorter term. We say that that's higher time preference, and you can see that with how people behave on the timeline with every little move. But needless to say, I think that I've said this numerous times, I think we're in the eighth inning. There's a lot of things lining up. These things only really come together in hindsight, after a top is in. And again, not the long-term top. It could be long, right? It could be months, but it just happens to be the final thing you're waiting for after all of these signs is prices actually to drop drastically. And by the time that happens, when it's 20% off the highs, 25% off the highs, then it's like, all right, it's too late to act at that point. And then you're forced in a position where you feel like you have to act, and then, you're making poor decisions because of that. So you have to have an idea of where you're going to exit and the things you're looking for. And this is with regard to, my own positioning, my own longer term positioning, more position trades, spot allocations, and so forth. You guys know over the last cycle, I've tried to be as nimble as possible. That's just who I am as a trader. It tends to influence my longer term positions as well, but it is what it is, right? I know what I'm good at. I know where my area of competence is. I try not to let myself fall victim to style drift and to change things up too much. So a lot of times that might mean that I'm entering back in a trend that is moving up, because a lot of times I'll look at price as the most important feedback tool. And in this case, we're having all of these signs. We have a big buyer in the market that is lifting, but prices are not. And it happens to be that this is in a very well-defined area for my exit, my original exit, right? My more recent exit was right around here. We're talking right around the 106 region. So for me, it doesn't make a whole lot of sense. And again, I'm talking my book. It doesn't make a whole lot of sense for me to jump back in head first, take a bunch of risk, when I think the line in the sand to do that is not too much higher. Like if we're starting to base out above 110, we're starting to base out above all-time highs, and the stock market's looking really strong. Let's say we have a little bit more news on the tariff front, and we've seen how the market has digested that. Well, it's a different story, right? Then I will get back into the market in some capacity, not as much risk as I had on the lead up, not as much exposure, but I will be happy to capture another possibly more meaty move. And it could be the kind of move that we had, in October 2021 going into September 2021. We did have that final spike up. So it could be something that takes us up into, 115, 120 before maybe possibly correcting at that point. I get the impression from a lot of different sources that larger players are de-risking. It seems like there is a lot lot of profit taking across the board. Again, this has been a really strong move. And it also, again, there's a lot of things that I think line up for me that make me less comfortable for having as much exposure as I did. The shorter term trade opportunities, they seem like they'll be abundant. If you look at where we're trading right now, again, big picture, I always want to know where I'm sitting big picture because I don't want to be taking too much risk when we're tapping at such a defined level. And it's extremely rare, again, very limited sample size, but it's extremely rare that we have this kind of swing failure on a weekly and we don't have a further correction and consolidation. So prices can spend some time up here, get bulls complacent again, entering back in before ultimately dumping much stronger next time because you've pulled more of the market back in and you made things top heavy again and you don't have the same gusto and buying power that we had previously, and that's already kind of been evidence to this point. Sailor's been lifting a ton and someone's happy to provide that on the other side. It's not like we're seeing, minimal volume come into the market and do a lot of work, which is what you see in strong trends. You see even small volume has a large impact on prices because no one's offering liquidity. No one wants to make the other side. So this prices are clearly very sticky up here. And for that reason, I think it pays to keep that in consideration with any kind of shorter term setups. And again, with my overall positioning. On the lower time frames, one of the setups that we see is we've actually been able to trade back into, this was last week's value. So if you look at sort of the VWAP of last week, again, looking at 1 standard deviation, 2 standard deviation bands. These are slightly adjusted, slightly modified, but we're just trading back within that range. Again, tapping at prior all-time highs, tapping in a very sticky area. And a lot of this move has followed the stock market as well. So I think it'll be important to focus on the ES. We've had earnings, we've had FOMC. It started off one way, Powell ended up cleaning up at the end. A lot of reporter questions hinting at Trump and his effect on the Fed, if there is any, and whether or not the Fed will remain very steadfast in their independence. Trump likes to use the markets as sort of a barometer of his success. So there's going to be a lot of tension, I think, on that front. I think there's going to be a lot of news trades over the next year. Headline trades and catalysts and sort of event-driven trades based on Trump kind of just saying anything. And the tariffs are an example. This is the tariff candle right here. The tariffs that were proposed for Canada and Mexico, 25% tariff on oil. This stuff is not confirmed yet, but these are things that can jolt the market because it's possible that those cause an increase in inflation as those costs are passed down to the consumer and to the buyer. So that could be troubling. We had some not so good earnings. There's still some conversation around DeepSeek and whether or not that's legit that they're able to run those models and be very competitive with what we see for a fraction of the cost, which makes these valuations look insane if that's the case, but you never really know whether or not that's true. But it's just important to keep all these things in mind because these things are rippling over into our market. This is very much a Bitcoin market. Like people are talking about alt season every other day, every little bounce all the way down, but this is very much a Bitcoin market. And it's not like people talking about the timeline as if it's morose and down in the dumps and everyone's depressed. If you look at BTC, and I shared this earlier, it's not really reflected in some of the things that I think are a little bit more valuable than just following CT. And one of those would be looking at something like, 25 delta risk reversal. So if you're looking at 25 delta risk reversal, you're looking at the implied volatility of the 25 delta calls minus the implied volatility of the 25 delta puts. So you're kind of just seeing whether or not people are buying more insurance, whether they're buying more upside. This can be influenced by people selling puts, by people selling calls, but a positive value indicates that people are still reaching for upside, looking for that leverage upside exposure and buying calls instead of favoring puts. If this was negative, it's an indication that maybe people are selling upside, right? Expecting the market not to trade higher, or outright buying puts, an implied volatility of puts going up, buying protection, hedging against any kind of move. That's why I call it insurance, right? Any kind of move to the downside. You don't really see this. Whereas in previous pullbacks and previous consolidations, it tended to get more extreme. But one thing to note is those extreme moves were more extreme than what we have right now. But if you look at, again, just like the 1 month, 2 month, 3 month, there's a lot of optimism in this market. You could look at 3 month annualized basis. If you're looking at quarterlies, not like those are completely compressed. That's a little bit misleading at times because people are going to be arbing that and taking advantage of that carry trade. But funding has been positive. There's no negative funding across the board. Again, these things are a little bit different now in this market structure, but it doesn't seem like people are that worried. It seems like there's a lot of people on the timeline that don't own Bitcoin, have been in meme coins, and have been doing very poorly. And as a result, again, experiencing what comes along with that. If you look at most of the meme coins, I have to say as a caveat, so I said this in the Telegram, a lot of these are starting to approach what are areas that would be reasonable to look for a bounce. And they could continue down over time and give you sort of that euthanasia roller coaster that everyone's used to seeing. The famous crypto roller coaster bounces all the way down until you approach zero. It never hits zero, right? It's like an asymptote, but bounces all the way down. And this is because people get crowded at the lows, sideline capital builds up, a little bit of movement to the upside occurs, and if it's close enough to the bottom, it gives you that impression that it is a bottom. And you get people piling in, but there's less money this time around. sellers are able to overwhelm buyers at some point lower, and it just continues for a while. So if it's like 80 to 90% off the highs, I would keep an eye on it. Anything that was really hot, if it's 80 to 90% off the highs, if you look at like peanut, probably not as significant in my opinion as something like this. I shared this in the Telegram. Probably not as significant as something like WIF. Again, any kind of return back to Binance original prices. So Binance original price being the low of that open. So anytime something is listed on Binance spot market, it's very rare that you'll see that it'll trade all the way back down to that level and not bounce. It's not rare that it'll trade back down to that level because we've seen that multiple times. It's just you have to be willing to step in here. It looks like the floor could fall out from under you, but this is because of that prime opportunity to get on the other side of, because people panicking through that level because it looks like there's nothing there. I'm not going to share any specific alt setups. Keep an eye on any alt that is down almost 90% because you're going to get very simple bounces without much effort. Again, I wouldn't extrapolate too much from it. There are strong projects, Jupiter, Hype is one of them. I'm biased because I'm positioned in Hype. They have a Bitcoin spot market that's releasing soon, but I would just keep an eye on anything that's extremely crushed and still has somewhat of an active community. Obviously pay attention to some positioning details when you can, some funding, open interest, some kind of feedback with that might indicate that people are really starting to jam into the low, getting crowded in shorts and so forth. You don't have to see that. A lot of times when you return back to these levels, regardless, you're going to see a bounce there. And often it's good for 20, 25% move. So just keep that in mind. Take profit at some point though. I think it's extremely unlikely that you're going to get a whole resurgence and return to a lot of the things that have completely retraced at this point. It is a Bitcoin market. It is a picker's market. I think it'll remain that way. When it comes to ETH, I'm not nearly as optimistic as anyone else. I think that if you have a period where Bitcoin is not really doing much, this market is way too insistent on ETH eventually doing something. I wouldn't be surprised if this continued to break down. I expect this continues to break down even further. I don't think we're going to see a complete shift in behavior of participants. I think that Solana is probably more likely to benefit from that rather than ETH. And even Solana, I've seen some insane targets for Solana, 1,000 plus. I don't see that. I think sometimes it's good to take the log chart off to put the motion back in the chart. I don't see Solana doing much more going into March, given that there's a significant amount of supply that's going to hit the market. And it is a material amount of supply. We can consider there's not a lot of buyers so far right now. Trump coin was unable to do anything, is still unable to do anything. I still would keep this on my watch list, honestly. He can't say anything about it, right? But it pays to pay attention to his grifter team and how they're allocating. Wouldn't trust them, right? As far as I could throw them. But I think that this is an area you just want to keep focus on, what is coming out of World Liberty Financial and anything related to Trump. The guy used to have vodka. They're trying to make a buck in any way they can associated with his name. So I think that pretty much covers it. Again, short-term setups, shared some thoughts in the Telegram. I talked about the possibility of returning and closing this gap. We got overthrow. We're trading back within the structure. And I had said that if we're able to hold, I think 105.5 region, if we're able to continue to base out and we're building value and we're trading within, if we see this continued value migration upward, I think you're going to get at least another test of those highs around 106s. But I could see this continuing up back to this naked POC right around 107. And remember, this doesn't change really anything because the high time frame structure right here, it's further up and it's clear there's a lot of stickiness up there. And every time you look at market trade up there, there's a willing spot seller that is offering a considerable amount of BTC into all of this. So I would just keep that in mind. Again, I think we're very close to the end. And I don't mean end. I think Bitcoin is something you want to hold for years. But if you're trying to be nimble, if you're trying to be tactical and you're trying to make more Bitcoin, I think it pays to know when to hold them and when to fold them. And this is not an area where I think it pays to take too much risk. Not some place that I'm looking to open up shorts or anything like that. I think for shorts, you have to really pick your shots. There have been some good opportunities I was able to jump on, but I don't like to share those too often because I don't want anyone doing the same and late and then, getting blown out because it's just the market trades very quickly to the upside. There's still optimism, but it's not responding to great news as it once had. And I think that's important. I think there's a lot of things that are just on the table right now that make me a little bit less comfortable. Let's say that we had one more, right? Let's say it's the 8th inning. I did that timestamp of what the 8th inning would look like if we had 8 innings back to the lows of FTX. And it leaves us with March and April as the potential top from a time standpoint if you're just looking at innings and even intervals. So let's say we continued up and spiked up and then we traded up into above 110. I think a top means that you trade the same way that we kind of did over the summer. Maybe we have a downtrend, maybe we fill this structure out. It wouldn't be weird, it wouldn't be bad, it honestly wouldn't even change the trend, but I wouldn't be surprised. And this area is not an area where I want to take as much risk as I would down here or within this structure. I know people say, oh, everyone says that in crypto, everyone wants lower prices. No, literally, some of those opportunities are the best opportunities, which is why I said back here, this was an incredible long. So that's that. I wouldn't be pressing the gas right now. I could be wrong, right? I could absolutely be wrong and it could reevaluate above these highs. But let me just explain something really quickly. This kind of structure is thinning out towards the highs. So you get a structure like this, it builds a long base, breaks up, puts in a strong move, and puts in a shorter base. This is becoming eventually a parabolic structure. One of the things I used to say in the past was, have you built a base? For the move that the market is attempting, has it built a substantial base? And if we're going to continue right from here, you're starting to look at possibly a very vertical move without much established below. And I think that is the move that ultimately breaks the camel's back and gets people in really late and poorly positioned. And that's that, guys. Till next time.